You're listening to AI PRISM from Seoul Economic Daily.
It's Tuesday, June 30. Let's look at what this means for retail investors in Korea. I mean, imagine just totally giving up the traditional safety of the real estate market because you are, well, absolutely convinced a local stock index is going to hit this mystical 10,000-point milestone.
A level it has literally never even come close to reaching.
Right, exactly. But that is the massive gamble everyday investors are taking right now, all riding on the back of this artificial intelligence boom.
Yeah, and to really grasp the scale of what is happening here, you have to look at the sheer numbers driving this euphoria.
Yeah.
Year to date, Samsung Electronics is up 169%.
Wow.
And SK Hynix has soared like 304%. So this insatiable AI-driven demand has essentially pushed the KOSDAQ index to the world's top return for a second consecutive year.
Which is wild. And those staggering triple-digit returns in AI chips are acting like a magnet for everyday people. Right now, 70% of Korean retail investors are actively adding to their stocks, literally rotating their capital right out of real estate to do it.
That is a massive behavioral shift.
It really is. And, getting back to that milestone I mentioned, astonishingly, 25.8% of those investors expect the KOSDAQ to cross 10,000 points by the end of the year.
That is just incredible optimism.
Yeah, to put that in perspective, that's like expecting a normal streetcar with a top speed of 100 to suddenly win a Formula One race. It is just pure euphoria.
It is, but it's not just retail optimism fueling the fire here. There is heavy institutional backing too. Take DWS Group. They manage 18 trillion won, which is about $12.9 billion in Korean assets.
Right.
And they argue that despite this massive run, Korean shares are actually still cheap, trading at just 8 times forward earnings, meaning you're basically paying $8 today for every dollar these companies are expected to earn next year. Plus, they believe Korea's inclusion in the MSCI Developed Market Index is, quote, a matter of time.
Which is a huge deal, right? Because if Korea gets added to that index, it's basically like being added to a global VIP list. Giant index funds around the world are mechanically forced to buy Korean stocks just to track the index, so billions of dollars in passive funds just flow in automatically.
Exactly. It is a guaranteed wave of capital.
But we really need to look at what this concentration of wealth is doing to the market mechanics. Because Samsung and SK Hynix have such massive market gravity right now, they're acting like a financial black hole.
Oh, absolutely.
They are warping the rest of the market, just sucking all the oxygen and capital out of the room. I mean, that's why the smaller, tech-heavy KOSDQ is suffocating. Its trading volume plummeted 70.5% in just 2 months, actually dropping below 1 billion shares.
And if you're holding any broader tech exposure right now, you really need to understand exactly why capital is seeking the gravitational safety of those giants. The Bank of Korea just released their financial stability report, and it clearly warns that tightening global funding conditions could be what ends this cycle.
Wait, so not a drop in AI demand?
Right, not AI demand. When global interest rates go up, the risk-free return on things like government bonds gets incredibly attractive. Suddenly, big investors don't need to take bets on tech growth to get a good yield, which mechanically drains capital out of the stock market. That liquidity squeeze is exactly what suddenly ended the 2023 battery stock boom.
Okay, I hear you on the macro environment, but I kind of want to push back on the idea that AI itself is perfectly insulated here. Like, is the demand really safe from disruption?
What do you mean?
Well, if we look at China's CXMT, they just signed a 4.5 trillion won, which is roughly $3.2 billion DRAM memory chip deal with Tencent. And they did that right ahead of their own massive 6.7 trillion won, or $4.8 billion IPO.
Yeah, that is a huge move.
Right. So doesn't this rising, well-funded Chinese competition directly threaten the pricing power that Samsung and SK Hynix are banking on?
Oh, that Tencent deal is exactly what keeps institutional fund managers awake at night. You are completely right. The moat is not invincible. But ironically, that fear of incoming Chinese competition is exactly why money is crowding into the biggest, safest giants rather than smaller startups.
Ah, I see.
Yeah, investors are favoring sheer scale and fortress-level balance sheets to weather any potential price wars. So the real variables for you to track moving forward are those global credit conditions and the market impact of that CXMT IPO, not just whether Samsung beats its quarterly earnings.
Which leaves you with a pretty compelling question to chew on. If the ultimate threat to your tech exposure isn't a lack of AI innovation, but rather the mundane, everyday mechanics of global interest rates tightening, Well, how vulnerable is this historic supercycle to a simple liquidity squeeze?
It's a powerful reminder that even the most future-facing technologies are still bound by the gravity of traditional finance.
That's today's AI PRISM, Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a One Eye for Eye award-winning series. We'll be back tomorrow. #KOSDAQ.
You've been listening to AI PRISM from Seoul Economic Daily.